in the news, in Canadian news, we're hearing a lot about this new mortgage stress test. For a lot of the Americans, they actually don't know what that is, but in Canada, it is just a way to make sure that you can pay if the interest rates rise. That's really what it is. So they're going to be able to lend you less and less money. So the proposed changes coming up on this mortgage stress test, if you look at the screen above me here, this is like basically your financial heartbeat. They want to make sure that you're financially sound and financially capable of paying for something if it goes up in rate. So the Canadian stress test, it started in 2016. There were some changes to it in 2018. Then we move forward after that, and it's basically to cool the market from homes that are over $1 million. That's basically what it's aiming for. So it's impossible for the entire country, right, to get affected at the same percentage. So this is a good way for the government to come in and especially target high-value homes, which mainly in Canada are focused in Toronto and Vancouver. So they're deliberately targeting that one market, okay? Generally over 1 million. This is the one that they're trying to cool down. So for you that don't know, mortgages can be an insured mortgage or uninsured. So if it is going to be insured, it's generally a high leverage one. That is normally the 5% down that you're going to be paying, and that is going to be high leverage. High leverage is insured by the CMHC or the government body, right? But what happens if you put 20% down? You no longer need any insurance. But there's always caveats, right? So uninsured properties here. Uninsured is when the price is less than $1 million. Also, if you have any type of rentals, it's going to be any kind of money, if it's anything that is going to be rental upstairs, downstairs, Airbnb, sometimes depending how you declare it, even if it's your own property, depends. It also would be uninsured if it's over 25-year amortization rate, and also if there's any refinancing going to happen. So those are the types of stress tests for uninsured properties. And that's what we're going to be talking about today. So the Office of the Superintendent of Financial Institutions here, he wants to raise the rates in 2021 from 4.79% to 5.25%. Why is everybody having a hairy little fit over this tiny little increment, right? He's only asking for 0.5%. Guys, 0.5% makes a huge difference. So this is going to be for uninsured mortgages, or the Office of the Superintendent for Financial Institutions. This is going to be this 0.5%, raising from 4.79% to 5.25%. So that is for uninsured mortgages. And for the insured mortgages, it's going to remain unchanged at 4.79. My own personal opinion is that if they're doing this to cool the market, it would be very unlikely that they would only affect it on one of the two mortgages. They most likely will come for the insured mortgages down the road, but just not yet. That's what we normally see. So this is the question that everyone is asking. How does it affect me? How does it affect me? What is this supposed to mean to me? So this is the bottom line. The bottom line is that your mortgage maybe will be at 2% right now, and the stress test is 2% above your rate or the stress test rate, whichever is higher. So whatever rate that you're at right now, plus 2%, that is your stress test, or 4.79. Okay, that's what it is right now. But the proposed changes would be your mortgage rate plus 2% or 5.25. A lot higher, whichever is higher. Those are the two, right? So remember, whichever is higher, that's the main thing. And so this is only 0.5%, but what is 0.5% on $1 million is actually a lot, right? So an example is before June 1st, 01, you might qualify for $1 million mortgage. But what would happen after June 1st, 2021? You would only have a mortgage of $950,000. So you basically are going to lose $50,000 worth of mortgage ability. That's where you're going to have a big difference on you. is when you're going to try to get your mortgage. So let's take an example here. I wrote one out here. So this one right here, 2% mortgage, 25-year amortization, $600,000 mortgage. What is going to be your payment without the stress test, right? $2,540. $2,540. When they're going to do the stress test right now at 4.79, the government is going to ensure that the banks are making sure that you can cover a $3,420 mortgage payment. So let's get that clear, right? Your payment is only $2,500, but the government wants to make sure that if the payment goes up to $3,400, you can still cover it, that you are not going to lose your house. They really don't want another massive problem like happened in the United States when the entire system almost crumpled because people were over-leveraged. So this is where the stress test comes in. Even if you can afford $3,400, your payment would only be $2,500. But now they want to make it even higher, even more room available if you could not pay. So this is the bottom line for you. If the new stress test takes effect as of June 1st, that you will get $5,000 less borrowing room for every $100,000 of purchase. So if you could wanted a $600,000 purchase and mortgage, you can get $5,000 for every one less, $30,000 less after the new stress test rules. That's a big deal, right? So if we're talking about the size of homes or condos, remember the prices that we're talking about may remove your second bedroom, may remove your second bathroom, may remove a parking spot or a finished basement. It actually is removing a lot of purchasing power away from the buyers. So that's going to be a very, very big deal for us. So remember, this is going to be happening. They're proposing June 1st. $5,000 reduction for every $100,000. So that's going to be a really big deal. So here are some ways for you to avoid the stress test. So the Department of the Superintendent for Financial Institutions, they do not dictate all lenders in Canada. So one way is that you could always use a credit union. Credit unions are not the same as the big federally controlled banks. In addition, you can also get a private lender. That could be your parents. It could be some other type of private lender, friends if you wanted. Or there's also seller take-back mortgages, which are becoming more and more popular. So if you are not able to pay for some reason, or you didn't want to go through your financial institution, you can approach the person who owns the building or the company or even the house and offer them all of your financial information, and you will be making the payments directly to them. That way, you are completely sidestepping the bank, and your mortgage payments are essentially going to the old owner. Of course, if you ever defaulted on your payment, the owner would just come in and take his home as is. So this is a good way for you to avoid the stress test, is credit unions, private lenders, or seller take-back. So this is my take on it. If we do raise this rate, it's going to make it very, very hard for especially people who are first-time buyers. It's going to make it extremely hard for people who are move-up buyers. So move-up buyers are generally people who are now together. They had their first kids. They want to move into a little bit of a home, and they're stretched to get into those homes that are in the $800,000, $900,000 range. The prices of those homes that are in about the $800,000 range are going to be getting inflated really quickly up to that $1 million mark. Your $800,000 homes will very, very quickly turn into the $900,000 homes because of this stress test. This stress test is very illusionary that the government is doing something about it and that a big change is going to happen. We've already seen the changes of the other stress tests in 2016, 2018, and now, and none of them have slowed down the housing market. So I don't see how this is going to be any different from the other stress tests that we've had in the past. Usually after about a month or so, the market will just absorb it and we're going to be moving on the same as we always do. But for the month of May, you will see a run up in prices for those properties that are 750, 800, 900, as they're going to be inflating up to $1 million to get just under that price point where the stress test is going to affect you right now.